If your business gets paid in crypto, holds stable coins, or even interacts on DeFi, there's a good chance your tax return is an audit magnet and you don't even know about it. I work with crypto heavy business owners all day and I see the exact same 5 mistakes that are completely avoidable. Let's hop into this and see what we can do instead. Whether you're an agency billing on USDC or a Web3 startup or even a established business that holds Bitcoin on your balance sheets, this is for you. Tax mistake number 1 is running a crypto heavy business in the wrong entity and never revisiting that choice once we've established enough income or the risk has changed. A lot of founders start off as being a sole proprietorship or even a single member LLC, and then all of a sudden they make a good amount of income, typically above $50,000, and a huge chunk of that revenue is from crypto. They try to keep everything the same, even though their profit, the liability, and how they get paid as a business owner has changed. Well, the result is going to be higher self-employment tax, weaker liability protection, and a messy situation if the IRS ever gets their eyes on the books. The entity chosen at the very beginning is great for starting in crypto, but as you scale, it might be time to graduate from there. A better setup starts with one question, and that's typically how much profit are you keeping after your expenses, and then also how much is flowing through crypto. From there, we start to look at whether it makes sense to become an S corporation or a multi-entity structure, often going with your clean operating company and then setting aside another entity for your long-term assets or long-term holds. The goal isn't to get fancy. The goal is to match your entity with your tax strategy and how your business makes money and then also holds money. Now, even if you pick the right entity, the next thing can actually make you bleed just as much in taxes, and that is how you pay yourself. Having no real plan on how you pay yourself, especially when your business starts generating income from fiat and then crypto, can be very costly. Here's what I see all the time. You've got money hitting your bank account, you've got some money in USDC, and then you also got some Bitcoin, Ethereum on your balance sheets, and then whenever you need money, you decide to pull it out of the account because there's a balance. There's no set salary, there's no scheduled owner's draw, and definitely there's no chance of you getting paid versus, hey, does the money stay inside of the business bank account or in the long-term crypto holds? It gets very hard to budget, save, and then also answer questions if ever the IRS determines, hey, what is your flow of income and where is it all moving? If your pay strategy is simply just logging into your phone, withdrawing the funds from your account or your wallet whenever you want, and not having a strategy in place, that's tax chaos. If you are an S Corp or something similar, you cannot live on owner's draw. That is not allowed, okay? You must take a reasonable salary and then you can take any additional profits in a more tax efficient way. Well, without a plan, you underpay yourself and then stress about your personal life, or you even forget to pay your personal taxes, and then this becomes a nightmare during tax time. When there's no owner pay strategy, you probably don't even have a retirement strategy either, and you're just hoping your bags continue to go up. So mistake 2 is living off of random withdrawals without a set plan in place for your salary, distributions, taxes, and building long-term wealth. Even if we fix that, there's typically another bottleneck that ruins everything for crypto heavy businesses, and that's typically, what do their books look like? That's mistake number 3. This often overlaps with a common problem is using your personal expenses with your business expenses or vice versa, okay? And then also, you can lose your corporate veil when you're doing this of not being able to distinguish what's business, what's personal. You need clean books that reflect exactly where you stand today. Having separate wallets for business purposes, a crypto tracking software, and then also a monthly reconciliation report so that your tax professional is not guessing when it comes March. When your books are a mess, you easily miss out on the next big opportunity, and that is taking write-offs or deductions that you're actually entitled to. Most crypto heavy businesses leave deductions off the table, such as a home office, hardware, software, travel, education, contractors, marketing, deductions off the table. A lot of you guys are so scared of these red flags and don't want to take legitimate deductions. The whole idea isn't avoiding these deductions unless you want to pay more taxes, but it's to make sure that you are documenting everything correctly and then showing the true business purpose behind it. Aligning them with your actual business model and done correctly, these are just going to be your standard expected write-offs. Tax preparation and tax planning are two different things. Tax planning is simply putting the information that has already happened on a tax return. Tax planning is designing an intentional plan on purpose before the year ends. At minimum, you want to have a handful of strategy sessions throughout the whole year to determine, hey, what's your profit levels? Hey, what entity structures do we need to optimize? Hey, these are things that are happening within the business. How can we be more tax efficient? Crypto definitely does make this trickier because price moves. Just because you have one great month of bull signs, but then the very next month it is completely dead, you still need to have a set intentional plan on taking money out for yourself. In reality, your plan should include what is going to hit your personal accounts, what's going to contribute to your retirement accounts, and then also what is going to stay within your business account for everyday business expenses, or in crypto for long-term holds. Treating bookkeeping as an afterthought makes everything extremely messy with all the stable coin accounts you have, all the exchanges you're interacting on, and then all the wallets that you are using for your business. This often leads to lost deductions and wrong numbers for your business. So we've talked about how to track your expenses and what you're able to deduct, but there's this one mistake that will make all of this useless if you keep on doing it, and that is only thinking about taxes during tax filing time. Changing entities, adding an extra revenue source, taking your profits on crypto, and then telling your tax professional is going to leave you in an empty ocean. Imagine going to the doctor and right when you walk on in, the doctor says, "Hey Alan, you need to get surgery." You're almost looking at them like, wait, hold on, you're a little bit crazy, right? So typically how it works when you go to the doctor, you sit down with a nurse, they get your height, weight, blood pressure, family medical, heart disease, and then they give that information to the doctor. The doctor analyzes the situation, they analyze you, ask a couple questions, runs tests, and then he prescribes the best treatment for you, whether that's medicine, therapy, surgery, whatever the case may be. The same thing applies when you are working with your tax professional. This way, you can still solve those problems in the tax year, okay? A lot of times when you go to your tax professional to file your return, they are historians. They are not a strategist at that point. It is too late to do anything when you are outside of that tax year trying to solve a tax problem for that prior year. If you're seeing yourself in one or more of these mistakes, that's actually a good thing, because now you know you have a bunch of room to legally save yourself money in taxes, and then also determine how does your crypto actually flow through your business. And you don't have to do this alone. If you want ongoing help, strategies, and real case studies of other crypto heavy business owners going through something similar, join our free school community. This community is where I go deeper on crypto taxes, entity, optimizing your cash flow, and then answering your questions, but also put yourself in there, see what works for you, see what others are doing, and then join a community that speaks your language. The link is inside of the description. It's the very first one. Tap it, request to join, and I'll see you inside, and I'll see you guys in the next one too. Bless.